Well, Apple's working for the Dow at this hour. Apple's juice is fueling the blue chips. Thanks to a blockbuster earnings report, we've got gains of about 3 1/3% right now. These are the strongest quarterly sales growth that the company has seen in more than 4 years. Here's the question, though. Does Apple's success still have that same juice to move the broader tech market in its entirety? Joining me now, Rosenblatt Securities senior analyst Barton Crockett. He is neutral on the stock and has a price target of $276 a share. But, Barton, you've got buys on Meta and Amazon. So I'm guessing your answer is no, Apple doesn't still have the juice that it used to move an entire sector, right?
Yeah, look, I mean, neutral is not bad. I mean, Apple has been, the stock has been moving in line with the market in broad kind of returns over year to date, the last 1 to 3 years. And the stock trades at a premium multiple, like 32 times forward PE. The EPS growth rate's kind of mid-teens. It gets a premium to growth because it's, it's the brand and it's going to be here forever. But to think that Apple stock has kind of meaningfully outperformed the market, I think for it to do that, you need to see them really lean into a new defining kind of product category. And there could be shots on goal for that if we look ahead. I mean, they're coming out with foldables, which I think are going to be more an increment as opposed to a game changer, but helpful. They're looking at AR glasses to maybe get in a fight with Meta. Over the very long term, if the Elon Musk vision of humanoid robots and everyone having one is true, you've got to think Apple might be a brand that could be a player there. So there could be shots on goal of transformation today. We're not underwriting that. We're thinking it's kind of a market performer, but a good company. Well,
they did mention that they had the memory chip shortage, and that has squeezed a lot of their production. But let me just say, you talk about sort of, revolutionary products. They came out with the Neo laptop, with the Neo, and that to me is the MacBook, low priced. It was released into the wild March 11th, and apparently this thing has got some legs. People like it. They, especially during a cost-conscious time, are rushing to buy this. Could it actually be something that adds more meaningful numbers to the bottom line?
It's certainly helpful, and I think this is part of the narrative that got Chernus the nod to replace Tim Cook. Is they're hitting the ball out of the park on the core blocking and tackling of managing their devices, the smartphone and the MacBook, to great industry-beating kind of performance. And the iPhone cycle right now with the 17 is immense. The Neo is putting them in competition with the Chromebooks where they've never been, and they're kind of cleaning up in that space, and they've moved in opportunistically given the cost pressures on the Chromebook makers. So, really impressed with that. But Mac is like 10% of sales. It's not the needle mover. The iPhone, everyone has one. So I think you're going to see a huge inflection that's sustained. They've got great growth now. It's not going to be sustained every year at this pace. It has to slow down. You have to see that next new big thing, I think, to really justify moving overweight into a stock like this. And that could come. I'm not saying it won't. I'm just not betting on that today.
You're a tough one. You've got a neutral on Alphabet. Google just came out with unbelievable numbers. The adoption of all things AI. They are selling AI custom-made chips. It's just really interesting to see that this is a company that has really been hitting a lot of record highs today, yesterday. And look at this stock. Just over 1 week, up 13%. You do, when it comes to the Magnificent Seven, you do have buys on Amazon and Meta. Overall, we're looking at a really strong NASDAQ and certainly the S&P 500 as well. When you talk about what we're seeing at the moment, which are records in both of those indexes, do you get any worries or concerns that it is these huge names that continue to be the largest propellant when it comes to the markets?
Yeah, look, I cover the specific stocks more than the index, but those stocks are driving the index. And look, those stocks are in this historic moment of dumping just massive capex like we've never seen into this new paradigm of AI. And what's exciting right now is that we're starting to see people broadly accept the idea that this helps, that the AI tools, particularly the agentic stuff recently from Claude, is making so many people more productive. And it's very early days. And so there's going to be a lot of roadway yet to run on this ramp up. So look, I think that for Alphabet, the stock has done great because their cloud business has really surprised with how large it's gotten so quickly. The other parts of the business, search and YouTube advertising, which has really been the dominant kind of driver of profits, they haven't really inflected that meaningfully. So, I think what we missed was the success with cloud, and and I think that the question there is how long is that going to continue? And with the doubling of the backlog, it's something you need to think about. Every day we get up and kind of think about what are we going to do. But at this point, we've been more interested in a couple of the other names, but I think overall the group is going to have a long-term kind of lift from this huge change, CapEx like we've never seen, to think that can help power the markets, I think, is not the craziest assumption.
$750 billion in total spend from the big hyperscalers this year alone. We'll watch it every step, every dollar of the way, Barton. Nice to see you. Thank you.